Hi everyone. Good morning, good afternoon, good evening, wherever you are. Welcome to IronFX webinars. Can you guys hear me clearly, by the way? Can you guys hear me clearly, everyone? Good afternoon, good evening, wherever you are. Shall we just wait for one more minute? I will start the session. Can you guys hear me? Can you hear? If you hear me, can you just give me a thumbs up? Yeah? Okay. Let me know, all right? Because I'm trying to use the the mic for cancellation noise around me. All right. Should we just everything is okay, guys? Give me a thumbs up. You can hear me clearly, right? How about my screen? Everything is okay, right? I think okay, good. Okay. Okay. Thanks for your response. Okay, you guys can hear me clearly. All right, so today we're going to talk about trading with divergence. Can you just quick check with you? Can you just hear my voice? Do you see like other people noise around me? Yes or no? Okay, if only can see, if you only can hear my voice, can you just give me the some thumbs up? Okay, thumbs up. Okay, only can see hear my voice. Okay, that's cool. Okay, that meaning that okay, my app is working because I'm using kind of like AI app to cancel my like any voice around me. Okay, at least you can hear only my voice. Okay, all right, cool. Let me just continue our session. Okay. And before I start the webinar, disclaimer first, all right, as you can see here, disclaimer, risk warning first, our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. The product may not be suitable for everyone, and you should ensure that you understand the risk involved. And disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. Okay? All right. And today's topic, we're going to talk about trading with divergence. Any one of you guys trade with divergence? So far, anybody trade with divergence? You can share with me as well. At least I know that you know what is divergence is. Okay. So About myself first, my name is Peggy. I'm an investment analyst, or you can trade analyst and a prop trader. Okay, currently I'm working with Average Frozen Group, or we know as Rocket. We are finalists for the best equity research in 2021 and the best EBIT research in 2019 to 2021. Okay. So this is the agenda for today. So basically today we're going to cover what is divergence, types of divergence, best indicator for spotting divergence, how to identify and trade divergence, like example of trading divergence. Okay. So what is divergence? So basically just want to keep it short. The price is moved the opposite direction with the indicator, which is we use to identify potential reversal in price trend by analyzing the difference between price movement and indicator move, meaning that whenever you see price make a higher high, okay, an indicator such as the RSI make the lower high. This is bearish divergence, okay, and the divergence occur when the price of the currency pair move in one direction while an indicator such as RSI is move different direction. Basically I will show you later. I think I saw the divergence in gold, okay, and there will be two types, no, actually with three types of divergence. So basically I'm going to cover the regular divergence first. So we have the bullish divergence, which is the minute the price form lower low, okay, like price form lower low, but the indicator is from the lower high. This is a bullish divergence. So they say that when the price form lower low, indicator form a higher low, sorry, this suggests trend the trend is losing strength, potential leading the reversal to upside. I think I need to move this okay. The bearish divergence, just opposite. Bearish divergence will happen at the resistance level, meaning that price form the higher high, okay, but indicator it form the lower high. This suggests the uptrend is weakening, potential leading to reversal to the downside. Okay, you will see this in the resistance level, and bullish divergence you will see that at the support level. All right. And another type of divergence, we have hidden divergence. So basically, hidden divergence is more to uptrend may continue. You will see the trend continuation for the hidden divergence. Okay. So what does that mean? They will say that bullish hidden divergence, the price form higher low, but indicator form lower low, indicating that the uptrend may continue. Okay. For the bearish divergence, the price form lower high, but the indicator form higher high, suggesting that the downtrend may continue. It will look like this. Okay, it will look like this. Clear? Let me see if I can find the hidden divergence. The hidden divergence, they will say that price from the higher low, price from the higher low, usually with the higher low like that, okay? But they say that the indicator is from the lower low. But in this case, they not from the lower low, so it's not hidden die. Meaning that, you see that? It's supposed to be higher low. The indicator, it should make something like that. You make like that. Lower. Indicator lower low. This is from the lower, so it is not, okay? This is not the hidden die. The hidden die is very hard to spot, but once you spot, you will know that, oh, trend will be hidden divergence, right? One. I only can see usually the regular divergence you'll see very often, especially with XAUSD. You can see that, okay? Primary higher high, indicator is very lower high. You know that they're going to revert from this level. It doesn't mean in H4. Or of course, if you see divergence in H4 time frame, you know that that's really strong, and then price will fall at least 100 pip. Okay. What about in H1? Okay, this one. This is a hidden die, right? Price from the higher low. From the higher low. Indicator is from the lower low. This is a hidden divergence. You can see that price continue to go upstream. Okay, this is hidden divergence. Price from the higher low. Indicator is from the lower low. Higher low, lower low. Okay. Another one. Okay, I think that is a good example. At least you can see the hidden divergence here. That should be all. That should be, for example. We will look together again, okay? And another one. The indicator to spotting the divergence, right? You can use the eyesight one. Second, you can use the MACD or moving average convergence, the divergence, or you can use stochastic. Okay, let's say you want to try with stochastic, because you need to test it out. Some indicator may show the divergence, but other indicator may not show the divergence. Okay, let's say we're gonna use the stochastic. The setting is very high, because for the eye side I will use the default setting, which is 14. For the stochastic, if you want to do default setting, or let's say I'm gonna set at 933. Okay, let's see, we're gonna spot the divergence here, for example. Okay, right? You can see that. Oh, he didn't make high. Yes, you can spot the divergence. This is a hidden divergence as well. Okay, is this a hidden divergence? No, this is not the hidden die, but lower low, higher high. Yeah. Okay, let me see the this is, you can spot the bearish divergence. Okay. You can spot the valid divergence as well. Okay, I think this not bad. This is a bearish divergence. This called extended divergence. Price make a higher high. Indicator is make a lower high. It's make the lower high. Okay. Or I think gold is just sideways. So basically gold is sideways. I think it's just sideways until maybe New York section. Okay. So that's the indicator. Okay. So we stated how to identify a trade divergence. So to identifying and trade divergence involve recognizing when the price and indicator are moving in opposite direction, signaling a potential trend reversal or continuations. So step one, you need to choose indicator. You choose one. Either you want to use the RSI, MACD, or stochastic. Pick one. Okay, I personally pick RSI. Okay. Step two, identify the market trend. Determine if the market is in uptrend or downtrend. Okay. If of course if price on uptrend, we will know that price make a higher high, higher low, higher high, higher low. If downtrend, price make a lower low, lower high. If price sideways, it's just ranging within the square box. Okay, something like that. We know that, right? Okay. Step three, look for the divergence signal. Rigorous divergence indicate a potential trend reversal. Bullish divergence, of course, price form a lower low, but indicator form the higher low. This often signal an impending reversal to upside. Bearish divergence, price form a higher high, meaning that price form a higher high. Okay, but indicator it form the lower high. So this is a bearish divergence. Okay, like that. This suggests a possible reversal to the downside. For the hidden divergence, signal trend continuation, bullish hidden divergence price form the higher high. Okay, but indicator it form the lower high. From here, lower high. Sorry, lower low, like that. Okay, and this is a hidden die. Okay, valid divergence as well. Price from a lower high or indicator from the higher high, suggesting the downtrend may continue. Okay, we're gonna look for the bearish hidden die together. Okay, bearish hidden die together. Let me have a look. Bearish hidden die, they say that price from a high, price from lower high. Let me see. Definitely we cannot use gold because gold on uptrend. So I'm gonna try another pair for the bearish hidden divergence. Let me just look for price from the lower high. That will be, let's look at the UK. Price from the lower, price from the lower high. Lower high. No. Lower high, lower high. Hidden die is very hard to find though. lower. Oh, this would be yeah. Okay, I got on top. Sorry, I missed. That would be low, lower high. Go back to UCAT again. I can see only like lower high. The indicator is make a higher high, meaning I have to go up like that. Lower high, lower high. No. It's not. You can see that this is a lower low. This will be lower high. The indicator have to make the higher high. It's not. It's really hard to find hidden divergence. Okay, but when you spot the hidden divergence, it's really powerful than regular divergence. Higher high, lower high. No. Or maybe I try go when there was the downtrend, for example. Lower high. When go was the downtrend, guys? Or on the uptrend? Maybe. Maybe from here, let me see if I can find one. Okay, can't find, but this is a regular divergence. Price make high, indicator is make a lower high. If we see this one, you can see that we spot a lot of the regular divergence here. Okay, you see that? Lower low indicator. See, we can continue to spot here. Continue, lower low, high, no. Okay, you can spot maybe in here, price make a lower low, right? But indicator is make the, maybe from here, higher low. I would say that from this spot. Okay, right, you can see that. Price make a higher, price make a lower high. Okay, in here, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and continue, right? But indicate it make the higher high. Support they're gonna make a lower low, continue, right? Falling. But you can see that this is a bearish continue. Okay, this is hidden divergence. This one also, this is very clear. Bearish hidden die versus the price make a lower high, indicator is make a higher high. Okay, you see that? So you can see the bearish continue. And after that, up to 3,000 somewhere here, then you can see price is all the way uptrend. Gold is price high right now. Okay, price high right now. Okay, you can see that. And now gold is ranging. It's ranging. So you see it's just within the zone. 1.3 to 1.4, just ranging. I think you might have to wait. Okay, now I'm going to finish the last slide. Okay, so now the differences between regular divergence versus hidden divergence is that Hidden divergence signal a continuation of the trend. The regular divergence is for trend reversal. So they will say that regular divergences and predicted and spotted easily than hidden divergence, right? Just now, right? We find it's really hard to spot. That is to be all for today for the hidden divergence. Now, we can practice and look for the divergence together. No, okay, again, not every divergence work out. Okay, sometimes it will be false divergence, meaning that you have to find the divergence in the key level. Okay, you need to look for the divergence in the key level. Okay, this divergence is already done. Okay, for the M5, then price is falling here. If it's done, we're gonna remove it. So now, like I said, you want to sell this your sell zone. Stop loss put above 36.21 because price is ranging. Okay, let me find this one. Let's say I would say that H4, I feel there's a divergence here. Is it divergent here somehow? Okay, it looks like the divergence here. Let me go down to the lower time frame. Okay, you see in H1, I saw there the divergence, right? Price make a lower low, indicator is make a lower high. This is the bullish divergence. Okay, and price was tap into the supply zone, demand zone, sorry, green, demand zone here. Okay, they're gonna put here, and then I need to buy the zones. Okay, to be the zone here. All right, price is rising really strongly. I go to the lower time frame. Whenever we see the divergence, I saw the confirmation with your price action. Oh, here you see your price action. That's why price go in the zone and then rising. Okay, did you see that? You see your price action here, the price action over here. Okay. Where should you aim for TP? We would aim for the pullback at this somewhere around this neckline here first. So that would be the about 20 pip if you go here, but if you go sin the wick about 23 pip. Okay, that would be the level that you need to monitor at this level. But we saw the divergence here, meaning that if there is a divergence, if price can go above, it might pull back slightly a bit here and then target here. If they can break above, okay, then we're gonna target here for the another OB here. Okay, so meaning that if they're gonna break this neckline, pull back from resistance, become support, your target here. Okay, any question? Okay, we still have 20 minutes. Okay, this is we have a confirmation, we have a divergence here, we have a price action. So if you want to buy, if you have a buy entry, you hold. Okay, you're gonna target here first for TP1 or here first TP1 and monitor, and then TP2. If price can close above, excuse me, if price can close above that target here for second or for the next, excuse me. Next, take profit. Okay. This BTC. Okay, BTC, the reasons sell, price falling very strong when they make all-time high. I saw the bearish that was here. Monthly time frame. It is very strong in weekly. Seen here. Right? We can see that. Divergence here. It's really see very clearly in T1. Price make a higher high. Indicator is make a lower high. Right? So price had break and complete the divergence here. This is our support level. Price close below, now it become your pullback resistance. Meaning that if you want to sell, you need to monitor because it seems like they might want to break close above. The next, this is your sell zones. This is your sell zone. Okay. This zone you monitor. And price, let's back the support level is here. The wick, the demand zone here, first support, and the next support level is here. This for the 1 time frame. So if price gonna do the lower low, lower high, lower low, lower high, and they close above this high, they're gonna go pull back and then continue target. They can break, gonna pull back and continue to go higher. Now the condition is price can close above, I mean the body close above 114 or 115, and then they're gonna changing momentum. Okay, but now the divergence is over. Let's say you sell SINT 124 all the way to 109. I don't know how much you have earned. From here, support level, pull back. Okay, resistance and continue to sell, make a BOS. Okay, zoom in to see here. BOS here. Right? Level. Back. First, long back the one. All the way to uh, 6:30. Okay. I don't know why. from 22 I want to click okay, stop loss just above, and price is falling so strong. Price is falling so strong from 22 now to 16. It's about 7. I think 70 pip. That's very quick. Now it's bouncing off. Okay. So 16, I think some of the people they like to play the at this level. Okay, they might think that okay, go ahead the break of structure. Okay, they will think that go ahead break of structure, and then some of them they're gonna buy here. They're gonna buy here. Any question, guys? Last question before I end the webinar. Just be careful for gold today. If you make a profit already, I think you should just stop because it's really hard to trade gold now. We want to buy either so too high, we want to sell. We don't know whether gold is still want to continue to make all-time high. Okay, so just be cautious today. You want to trade gold. Okay, I will catch you guys again in the next Monday. All right. That should be all for today. Thank you so much for attending the webinar. Hope to see you guys again next week. Bye for now, guys. Take care. All right. Bye bye. Oh, what happening here? Hmm? Okay. Bye, guys. Bye bye.